Traders are shorting the cable, aka GBPUSD. Now, investors and traders are building up speculative positions against sterling as the conviction grows that the Bank of England is going to cut interest rate ahead of its US counterpart. The shift in positioning is driven by the falling UK inflation and weak economic data. This has helped to push down the GBP against the dollar 1.5% to date this year. Now, all the traders are now expecting the Bank of England is going to announce today that they're going to cut interest rate earlier than the Federal Reserve. Bank of England is about to announce its interest rate decision at 1 p.m. Central European Time or 12 o'clock UK time. Now, this interest rate decision isn't what most professional traders are focusing on. The most important part is the meeting minutes and, of course, the speech from Governor Bailey. You can see from this Financial Times article that traders scale back expectation for the Fed rate cuts. And the reason for that is within the yield curves. You can see that the UK 3-year yields are already falling because traders expecting that the Bank of England is going to cut interest rate against or ahead of the Fed. Contrary, you can see that interest rate expectation in the US is rising because of the hawkish communication from the Federal Reserve. But how can we profit from this divergence between monetary policy rates? The answer is very simple. We have the cable, which is the sterling against the US dollar. This interest rate expectation or interest rate divergence will trickle down into the currency sterling versus the dollar. Now, it's a simple theory that if one country's interest rate is higher than the other, that currency is going to appreciate against the other one. In this case, you can see from the yield curve that the sterling interest rate or interest rate expectation is already falling, whereas in the US it's increasing. Therefore, the sterling is expected to weaken against the US dollar. Now, if we go back to the sterling versus US dollar, you can see that I'm already in a short position because I'm expecting a sterling weakening. Now, of course, nothing is 100% because if the meeting minutes or if the speech of the Governor Andrew Bailey contains some hawkish commentary, then this position isn't valid. But as we speak right now, everything is set up for a nice juicy sell. Move on to the live positions, which I entered this morning, and I sent the analysis to the AlphaFX members. Also, I discussed everything today about sterling, US dollar and gold in the morning briefing because we have morning briefings every single day. So you can see that price is currently 1.4740 and gravitating just below the daily pivot. So I entered the short position. If you look down into the open position, it's the 9th of May, 5 lots and also 2.5 lots, speculating that price is going to go down all the way to 1.23 if the Bank of England is going to announce or they give any hints or information that they're going to cut interest rate ahead of the Federal Reserve. This is really a simple setup for those traders who understand monetary policy and interest rate divergence. But even for those if you don't really understand, you can just head to alphafx.eu and I give full macroeconomic analysis about what to expect on the market and how to enter into positions. So share this position in Discord to the members along with the gold long positions because I'm expecting some strengthening in gold given the geopolitical tensions. So if you missed the early entry about GBPUSD, maybe it's not too late and you might find some opportunities. What most traders teach you is that buy at support, sell at resistance, but it's an absolute crap. 70% of the time, it just simply does not work. It works in a bullish or bearish trend, but when there is an important data release such as the interest rate decision for a whole country is about to be released, support and resistance usually fail. You can see that there is a nice strong support at this price level, but because the Bank of England is expected to cut interest rate ahead of the Federal Reserve, this support is 99% that's going to fail if everything goes as planned. So if you're late with the early entry, I think it's still time because you can see that my stop loss is just above the previous lows and the other one is a little bit higher. So depending whether you have a small position, a large position, adjust your stop loss accordingly. This is not financial advice, but you can see that I have two positions, 2.5 and 5 lots. And targeting the previous low, and there's clean traffic on the left hand side, no resistance, no support. It should fall down very nicely if everything goes according to the plan. Now, if you want to receive daily analysis and signals and notifications when I enter a trade, head to alphafx.eu and become a member. Thank you so much. This is the AlphaFX.